it was well inside its 3-year trading range. This asset was selling for about $14,000. It had been pretty volatile for several years. It had been as high as $19,000 at the end of 2017 and around $5,000 about a year ago. It certainly had its ups and downs, but something happened immediately after the 2020 election. The price started to rise and rise dramatically. It more than doubled to $30,000 at the start of the year and has since risen to over $50,000. I'm not talking about a stock or any traditional investment, but what I am talking about has outperformed almost everything over the past decade, starting at less than a penny and going to as high as $50,000 in 10 years. Think about that. Some of you already know what I'm talking about. For the rest of you, join me in the Economic War Room where I will explain this phenomenon and why many people believe the best is yet to come. Just what asset rose from under a penny to nearly $50,000 in about a decade? There's only one that I can think of, and it's called Bitcoin. I know you've heard of it. You probably don't own any Bitcoin, even though you may have thought about it. Over the next half hour, we're going to provide you an introductory primer. We'll explain the basics of cryptocurrency in general, and especially Bitcoin. We'll talk about the blockchain and its many applications for your future. We'll even talk about how you might buy Bitcoin, why you shouldn't, and maybe why you should. This will be the first of many episodes that we do on Bitcoin and blockchain. And as with every Economic War Room show, we're not providing investment advice. We can't, because every viewer has a unique situation and there's no way to tell what makes sense for you. But we can give you good information and point you in a direction where you may want to get advice. That's really what you need. The best information from the Economic War Room combined with the experience of a well-trained professional investment advisor willing to work with you in applying all this good information to match your unique individual needs and circumstances. So let's get started. What exactly is a Bitcoin? Bitcoin was introduced to the world as a concept in 2008 by Satoshi Nakamoto. That's the inventor of Bitcoin, although it's actually a pseudonym. We don't know his real name, maybe her real name. The concept is that Bitcoin is a peer-to-peer payments function, skipping the need for an intermediary. Most transactions today require at least 3 parties, the buyer, the seller, and 1 or more intermediaries. Think about when you buy something online. You may deal with Amazon or eBay or Overstock or Walmart.com, but you also deal with a trusted third party for payments, like Visa, MasterCard, Venmo, PayPal. The idea of Bitcoin is that you could pay another party without going through a bank. This reduces friction, lowers cost, and provides anonymity. It works using a shared and mutually verifiable public ledger. In other words, the whole world can agree that a transaction has taken place, but without knowing who is doing it. And the transaction can take place without using money, at least not traditional money. The shared ledger is known as the blockchain. We could get into the specifics of that, but for now, just think of it as sort of a digital record that can be proven universally, sort of like a permanent receipt that everybody agrees on. Bitcoin is released in a process known as mining. There's a limit to the total amount of Bitcoin that will ever be mined, and the process of mining requires solving increasingly complicated mathematical equations. This requires massive computer power and lots of electricity, but we're not going to get into the mining process, at least not in this episode, even though it has created some very interesting investment ideas. We may talk about mining investments at some point in the future, but for now, we're focused on Bitcoin as a payment mechanism and possibly an investment. You probably already know that Bitcoin is not the only cryptocurrency, but it's clearly the dominant one with more than 2/3 of the total value. In a future episode, we may walk through all the varieties of cryptocurrency, but for now, let's focus on Bitcoin. And you should know that the first use of Bitcoin or any cryptocurrency was to buy 2 medium-sized pizzas on May 22, 2010. The developer paid 10,000 Bitcoin. That means that the pizzas cost about $250 million a piece given the recent Bitcoin price. Think about that. 2 medium pizzas for $500 million. Of course, Bitcoin was worth a whole lot less then. But the bottom line is that Bitcoin offers potential for use as a means of transaction. It may also prove to be a store of value, meaning that you can hold money in Bitcoin rather than dollars in a bank. Some view Bitcoin as an investment. Others view it as a volatile speculation. But what is abundantly clear, cryptocurrency in one form or another is here to stay, and money will never be the same again. So let's walk through a Bitcoin transaction to better understand how it works. First, you need to get the Bitcoin. We'll tell you how to do this a little later in the show and also provide resource links in this episode's battle plan. And to get your Bitcoin, you'll need a wallet. We'll show you how to get one. But let's start with the assumption that you already have a wallet and it has 1 Bitcoin in it. Based on recent prices, you're pretty rich. So what do you want to do with your $50,000? Maybe you want to buy some pizza and you order one from Papa John's. They accept Bitcoin. Total cost is, let's say, $20. You'll need 4 10,000ths of a Bitcoin to get your pizza. Now let's look at what happens. The Wall Street Journal did a good job of illustrating the transaction. Here are the steps. 1, Papa John's would provide you a payment destination address. The payment destination address is published to the network for all to see on the blockchain. 3, you would then send Papa John's 0.0004 Bitcoin using your wallet's private key. 4, the transaction's confirmed, processed, and secured by the network and the blockchain. It then shows up in Papa John's wallet. 5, you get your pizza. I'm not sure at this point how you tip the delivery driver. Maybe you use old-fashioned cash. But that's basically it. You did not use a credit card or a check or even cash except for the tip. Welcome to the 21st century payment mechanism. The only problem you might have is wondering if you just gave away a potential fortune. There's no doubt that cryptocurrencies are real and will be part of whatever the next monetary system becomes. And there's no doubt that our current monetary system is under strain. In fact, we've explained many times on this program, the Chinese, the Russians, and even some Europeans do not want the US dollar as the main mechanism for payments around the world. They want to replace the dollar. And when it's replaced, I'm sure a cryptocurrency will be at the heart of the new system. Now, we're going to take a break. When we come back, we're going to dive deeper into Bitcoin and see if this is something you should have in your portfolio, either as an investment or a payment mechanism. Before the break, we were talking about Bitcoin as a means of payment, buying pizzas and that sort of thing. But now let's dig a little deeper by asking a few questions. First, is Bitcoin money? According to the Federal Reserve, money has 3 functions. It's a store of value, it's a unit of account, and it's a medium of exchange. Using that definition, Bitcoin is clearly a form of money. We know that because 10,000 Bitcoin bought 2 pizzas in 2010, and that now would trade for $500 million roughly today. I'd say that was a decent store of value, much better than the pizza. In addition, Bitcoin offers a unit of account. You can price things in Bitcoin, whether pizzas or Teslas. And finally, Bitcoin is a clear medium of exchange. Not only can you price things in Bitcoin, but you can use it to pay for them as well. Bottom line, Bitcoin meets the entry-level standards to be described as a form of money. But is it a good form of money? The Fed points out that cows have been used in the past for transacting business. It's not very efficient to cart around cows every time you go shopping, but it has been done. To measure how Bitcoin stacks up, let's borrow further from the Federal Reserve's report on money. They list 6 characteristics of good money. First is durability. Cows are pretty durable, and so are $100 bills. And Bitcoin is durable as well because it's forever in the shared blockchain ledger. Now, an EMP might take down the electric grid, but if that happens, we have other serious problems. Number 2, portability. Dragging cows around is kind of hard, but carrying a wallet full of cash is pretty easy. So is a Bitcoin wallet. 3, divisibility. This is where it gets really rough when you use cows as money. Say you want to buy a soft drink. You can't really just cut off a part of the cow and trade it for a big gulp. But you can buy a big gulp with a $20 bill and get change back. Cash money is nicely divisible. But so is Bitcoin. You can fractionalize it, as we've shown. Uniformity. Dollars are uniform, and so is Bitcoin, but cows come in different shapes and sizes. They are not equal. A $20 bill is always worth $20. And one Bitcoin is worth the same as the next Bitcoin. They're very uniform. Number 5 is limited supply. Cows are limited. Bitcoin, as we've explained, is limited. We hope that the American dollar will be limited, but the way they're printing money, who knows? Number 6, acceptability. Cows are certainly the least accepted form of payment of the 3. Bitcoin is more accepted, but less than the American dollar, at least at the moment. You can travel almost anywhere in the world and spend American dollars. That may change over time, but it is true today. Overall, it should be obvious that Bitcoin meets or beats all of the characteristics except number 6, acceptability. But Bitcoin is rapidly improving in that area. Our conclusion, Bitcoin is a type of money using these standards. But that's not all it is. Bitcoin offers something beyond cash in the bank. It also offers some degree of privacy. Even though everyone can see that the Bitcoin that you have in your wallet is real, people don't know that you are the one who controls it or what wallet it's in. This provides an additional benefit of anonymity. It also explains why cybercriminals want their ransom demands paid in Bitcoin. So here's a new question. If Bitcoin is money, can it also be an investment? The answer may well be yes. Sure, if you bought Bitcoin for a fraction of a penny and it's now worth upwards of $50,000, it certainly would seem like a good investment. But will it be good going forward? Here's the problem. It's hard to be both good money and a good investment. It's not impossible, but it's hard. Let me explain. Bitcoin has gone through some very wild price swings. Up from a penny to nearly $20,000 and a few months later down below $5,000, then up to $50,000. When you step back, it looks a lot more like speculation. Money doesn't generally fluctuate that rapidly in purchasing power. I think the Federal Reserve left off an important characteristic from their list. They should add number 7, stability. Bitcoin has not been that stable, but it has moved up in price over time, even despite the fluctuations. I guess I'd call it speculative investment, maybe more than I'd call it true money at this point. If we did adopt the current Bitcoin as our monetary system, we'd be facing massive deflation. Because 10 years ago, 2 pizzas cost 10,000 Bitcoin. Today, that same 10,000 Bitcoin would buy 25 million pizzas. You should know that the cryptocurrency people understand this. They've developed and are working on things called stable coins that are much more for transactions than investment. Bitcoin even spun off something called Bitcoin Cash, for example. Again, we'll cover more of this in a future episode and also in our economic battle plan. But the key takeaway is that a form of Bitcoin can be used as money and a form of Bitcoin can be viewed as an investment. So now our question is whether or not Bitcoin is a good investment. Remember, we're not supposed to judge investments solely based on past performance. If you're going to pay $50,000 for one Bitcoin, what does it matter how much it went up before that? All that really matters is what it will do going forward. And therein lies the problem. No one knows. If Bitcoin were to be adopted as a replacement to the dollar, people would demand stability, because if prices for goods and services were to change as rapidly as Bitcoin moves up and down, there'd be chaos. But people are desperate for some place to put their money, and that has led to something of a mania for Bitcoin. Will it continue? As with any investment, you have to ask who or what stands behind it. There's not a government. It's not backed by the full faith and credit of the United States, for example. And there's not a company making profits either. There are no dividends or interest paid. There's not a traditional investment like stocks or bonds. And unlike real property, there's nothing that is tangible. There's convenience and innovation, and there are lots of people who agree that Bitcoin is valuable. So again, this all adds up to viewing Bitcoin as a speculative investment. And that means there are risks. So what are the risks? Let's start with the two big ones. First, there is government. Governments like to control the money supply, and they also like to keep close tabs on who has what. Bitcoin's structure goes around that, so there's a very real risk that the government will view Bitcoin as a threat and try to shut it down. In fact, the new Treasury Secretary and former Fed Chairwoman Janet Yellen has recently warned that the misuse of cryptocurrencies like Bitcoin is increasingly a problem. She also said that cryptocurrencies have promise. What does she mean? Well, governments point to the fact that criminals and terrorists use Bitcoin because it is anonymous, and they could well serve as a reason for a government to further regulate Bitcoin or shut it down altogether. If you strip away that piece of it, does it lose investment appeal? And what if the government wants to regulate? Might they also want to replace? What if the Federal Reserve offered a digital currency and banned all others? Try printing your own $100 bills and see how well that works for you. Governments are notoriously jealous of anything that challenges their power. Never forget that at one point the U.S. government banned the private ownership of gold because it was a threat to the American dollar. The second risk is further innovation. What if the next Satoshi Nakamoto comes along with a better version? Would the current Bitcoin fall into the dustbin of history? We know, for example, that the Chinese government is developing a gold-backed digital yuan. What might make it better is to have all that convenience and capability of Bitcoin backed by gold and a sovereign government. And then, what if the Chinese began a relentless campaign to undermine or destroy its rival? That would be a risk factor. Beyond these two biggies, there are a few other worries for a Bitcoin investor. What if you lost your computer that had the Bitcoin stored on it? Bottom line, there are risks. And that's why you shouldn't go at this alone. You'll want and need professional advice. We're going to take another break. When we return, we'll tell you how to get Bitcoin and what may lie ahead. Welcome back. We've talked a lot about the risks and the rewards of owning Bitcoin. Now let's dive into how to get it. And my suggestion here is you need professional advice. You need an advisor not only to teach you how to get it, but also to help you determine whether or not it makes sense for your portfolio. That same advisor ought to have the expertise to know how to get it safely. You should know Elon Musk and Tesla have recently put a lot of money into Bitcoin, like $1.5 billion. Even Morgan Stanley and JP Morgan, they've begun to look at adding Bitcoin to their investment holdings. Now, keep in mind, JP Morgan has been a huge skeptic on the issue, The chairman, Jamie Dimon, once said that Bitcoin was an outright fraud. Of course, the founder of JP Morgan himself, once rejected an investment in General Motors because he said, nothing will ever come along to beat the horse. But now JP Morgan, Morgan Stanley, and Goldman Sachs are making plans to own or offer Bitcoin. This is a huge change for Wall Street. Here's what CNBC reported on February 12th, reading, they said, Wall Street's newfound openness to cryptocurrency shows that the industry is being forced to contend with Bitcoin as its latest dizzying ascent and increased adoption among institutional investors, corporations, and fintech competitors spark fears of being left behind. If even one of the 6 biggest U.S. banks decides to embrace Bitcoin, it would be a major stamp of legitimacy for the nascent asset class. As for adopters in the corporate world, companies haven't yet publicly disclosed their Bitcoin investments. You're going to see a range of releases over 2021. There will be more corporates, pensions, more insurance companies investing in Bitcoin, according to an expert they quote. When the big banks and the major pension funds begin to hold Bitcoin, this means it will become increasingly easy to buy, hold, and sell Bitcoin in your portfolio. That's why we're adding a focus on cryptocurrencies into our advisor training program. We'll do that by bringing in top experts. And one example of that would be Dr. Patrick Byrne, the founder of Overstock and a true blockchain pioneer. Patrick has spoken at 2 of our training programs and has promised to teach our next classes about cryptocurrencies and how the blockchain works. It's going to be incredibly valuable. We'll also be exploring any new developments in the cryptocurrency world. Even though we firmly believe that you should have professional help when dealing with cryptocurrency, I did promise that we would teach you how to buy Bitcoin. So here goes, and I'm going to quote from a February 3rd, 2021 article in Investopedia written by Adam Hayes. And we're going to put the link for this in our battle plan. So let me quote. The title is How to Buy Bitcoin Legally in the U.S. I'll read some excerpts, but you should really read and study the entire article in depth because it's talking about the steps to buy Bitcoin. And number 1 is get a digital wallet. Let me read. In order to conduct transactions on the Bitcoin network, participants need to run a program called a wallet. Bitcoins are not technically coins in the traditional sense, so it only seems right that a Bitcoin wallet would not actually be a wallet. Your Bitcoin wallet that you will be assigned by an app or a service provider is essentially an alphanumeric string of random letters and numbers, but you can think of this as your Bitcoin address or your bank account number. Bitcoin balances are maintained using public and private keys, which are the names for these long strings of numbers and letters linked throughout the mathematical encryption algorithm used to create them. The public key represents your bank account number and is the location where transactions are deposited to and withdrawn from. This is also the key that appears on the blockchain ledger as a user's digital signature, not unlike a username on a social media newsfeed. The private key is the password required to buy, sell, and trade the Bitcoin in a wallet. A private key should be a guarded secret and only used to authorize Bitcoin transmissions. Some users protect their private keys by encrypting a wallet with a strong password, and in some cases by choosing the cold storage option, that is, storing the wallet offline. So how would you find a wallet? I suggest you start at the bitcoin.org website, which we'll put on the screen. Then proceed to step number 2, gather your personal documents. The U.S. Securities and Exchange Commission requires users to verify their identities when registering for digital wallets as part of its anti-money laundering policy. In order to buy and sell Bitcoin, you will need to verify your identity using several personal documents, including your driver's license and social security number. Step 3, make sure you have a secure internet connection. If you choose to trade Bitcoin online, use discretion about when and where you access your digital wallet. Trading Bitcoin on an insecure or public Wi-Fi network is not recommended and may make you susceptible to attacks from hackers. Step 4, prepare your bank account, debit card, or credit card. Once you have a Bitcoin wallet, you can use a traditional payment method such as a credit card, bank transfer, or debit card to buy Bitcoins on a Bitcoin exchange. The Bitcoins are then transferred to your wallet. The availability of the above payment methods is subject to the area of jurisdiction and the exchange chosen. Step 5, locate a Bitcoin exchange. After you've set up your wallet with the payment method, you'll need a place to actually buy Bitcoin. Users can buy Bitcoin and other cryptocurrencies from online marketplaces called exchanges, similar to platforms traders use to buy and sell stocks. Exchanges connect you directly to the Bitcoin marketplace where you can exchange traditional currencies for Bitcoin. There are many established exchanges that provide one-stop solutions with high security standards, and they recommend, besides Coinbase, CoinMama, CEX.io, and Gemini. The Investopedia article also lists a few other ways to buy Bitcoin, including Bitcoin ATMs and peer-to-peer exchanges. Again, we strongly urge professional help from a trained advisor when venturing into cryptocurrencies. If you have an advisor that you're already working with, please send us his or her name and contact information. You can do that at economicwarroom.com/advisor. We're offering world-class training for financial advisors, things they'll not get anywhere else. And once those advisors are trained, they'll be eligible to join the NSIC Institute. This is a powerful group that's intended to be on the cutting edge of financial advice. NSIC stands for National Security Investment Consultant. In the Institute, your financial advisor will have the opportunity to meet with top financial service professionals, national security experts, and even learn about cryptocurrencies. Our intention is to collectively promote liberty, security, and the values that make America great. And these advisors will be prepared to help you weaponize your money and to grow it and promote and defend the values you hold dear. A big part of what we're doing going forward will be tied to cryptocurrencies and the blockchain. Imagine if we owned our own gold-backed cryptocurrency issued by American states rather than the Chinese government. Or we could work with Patrick Byrne in developing a blockchain-based record of stock market holdings. That would eliminate a lot of problems of naked short selling and otherwise. These are things the NSIC Institute can and will help develop. To learn more, get a recap of this episode, download our Economic Battle Plan. Get your free copy at economicwarroom.com. Remember, what we see as a marketplace, our enemies view as a battle space. This is Kevin Freeman from the Economic War Room.